So the Bank of England have just increased the interest rates to 2.25%. But what does that mean for you as a landlord buying buy-to-let properties? Check out this video from myself and Simon Hodgson. Hi everyone, my name is Simon Mishevich from Optimised Accountants, and I have got with me...
Yeah, hi everyone. My name is Simon Hodgson from Funded Finance, buy-to-let mortgages for investors.
And I always like to have Simon with me when I'm talking about interest rates and in particular buy-to-let mortgage interest rates. We're not here just to talk about the Bank of England and what's going on there. It's really more important to understand about the marketplace for buy-to-let mortgages and landlords. If you need a mortgage, there is a QR code, so get to your phone and scan it on there and get a mortgage from there. But if you are on your desktop or another device, feel free to get the URL from the video description. All right, let's, without further ado, let's talk about the Bank of England interest rate, Simon. That has just increased to 2.25% with a review in November 2022. What's your thoughts on the 2.25% interest rate from Bank of England?
Well, I mean, to be fair, that is where the markets were pricing it in. So if we'd seen anything higher, there'd have been a bit of a knee-jerk reaction within the markets. If it had been a bit lower, we'd have seen a kind of maybe a rally within the markets out there. So it's kind of where expectations were. I mean, 2.25 is high in terms of historic over the last 14 years. I think that's the highest it's been. So December 2008. But in relative terms, it's still not too bad. You know, historic rates pre-credit crunch were sort of 5.5%. So we're still at a pretty low interest rate environment. And I think we need to take that in context. Educated investors are still investing based on those rates.
And we need to be mindful that just because it's 2008, everyone will soon be thinking, well, if that's the case, then the 2007-2008 recession saw a property house crash of 30%. That's not the same case here, is it?
Definitely not. No, what we had were subprime mortgages packaged up and introduced into the finance system in a way that were virtually invisible to a lot of lenders and banks. So therefore, there was toxic debt in the system and liquidity dried up. We're not seeing that at the moment. There's plenty of liquidity in the marketplace. We are in an era where we tightened up monetary policy and lending policy, so that can't happen again. So we just need to absolutely be relatively confident that funding lines are robust, money's out there to borrow, lenders are lending freely, to be fair.
Interesting thoughts. Thank you for that. Bank of England suggested that a change in bank rate affects how much people spend, and how much people spend overall influences how much things cost. So if we change the bank rate, we can influence prices and inflation. We aim to keep inflation at 2%. This is the target set by the government, and there's some other information there, but I won't read that. But my viewpoint is that interest rates cannot really influence inflation all that drastically. Why do I think that? Because of fuel. Fuel is coming from the war in Russia, Ukraine, and therefore the price is going to go up because of what's happening over there. We've also got the fuel prices in terms of price of oil shockingly going up as well, related to that subject. How does increasing interest rates really affect that, Simon?
That's a really great point. And I kind of, I can see exactly what you mean. And I kind of think that as well. It's a very blunt tool. It's the only tool that the Bank of England have got. And there are other pressures on the Bank of England that perhaps aren't necessarily taken into account by the mainstream media. But yes, in terms of fuel prices are our main issue, and that then filters through to everything that we buy. And raising interest rates isn't really going to affect that. I suppose the other thing we've just got to bear in mind, of course, is that most commodities that we buy, energies into the UK, we import into the UK, are priced in dollar. And as the dollar is being they're raising rates in the States. The Fed put rates up by 0.75, actually higher than we did. There are inflationary pressures that kind of come in from there. So maybe the bank is kind of reacting a little bit to what's happening in the wider worldwide market, money market. But yes, absolutely.
Yeah, it's
raising them
shocking
for
that you should even suggest that the UK are just like sheep falling off, or lemmings charging off that cliff without realizing why they're running off the cliff.
yeah, indeed.
Let's talk about this. This is talking about the advances and new commitments that are being made in regards to lending. From that blue graph, I can't see any differences. Before I get your views on the fact that we're not seeing too much of a difference in terms of people getting mortgages, I just want to read out this particular section and I'll get your views on this. It says the value of the new mortgage commitments lending agreed to be advanced in the coming months, quarter two of 2022, was 1.7% greater than the previous quarter, but 2.6% less than the year earlier. So they're saying it's increased from previous quarter, but not so much on the year earlier. The value of outstanding balances with arrears decreased by 0.7%. I'm not going to go further about arrears, but what's your viewpoints in terms of buy-to-let mortgages in particular? Are people now shying away from buying properties, or are you still seeing a high demand in buy-to-let mortgage applications?
Absolutely, yeah. I'm not seeing any difference in buy-to-let mortgage applications. So specifically, we deal with investors who've got some education and who understand how to do it. So not necessarily accidental landlords with maybe one buy-to-let that haven't really understood where they are within the marketplace. And yeah, demand's still staying high. I mean, obviously, there's a slight change when we came off the back of the stamp duty holiday, and I think that kind of accounts for how mortgage lending sort of changed a little bit at the end of that. And then since then, it's been consistent. We're still seeing that there's no decent stock coming onto the marketplace. If you want to buy stuff, there's still quite a fight to get it. It's not quite as strong as it was. And certainly residential side, the residential side I'm hearing from estate agents is backed off a little bit. But from buy-to-let, absolutely still strong. And arrears remain really low. Historic lows, the lowest since recording began in 2007. Potentially it's slightly higher in the residential market than it is in the buy-to-let market. But yeah, very low.
Thank you for that. We've got another article. Again, if you want to get the full article, just pause this video, get the URL. But this one talks about the interest rates announcement, and in that they talked about the Ross Boyd, founder of mortgage comparison platform Dashley.com, said a sizable rate increase would send shockwaves through the property market. I mean, you've said the counter to that, so it's interesting how people got different views. My clients, I've got to be honest, are still hunting for deals. A lot of savvy property investors. I mean, I've just bought a property because I knew it was significantly below market value, and to be able to kind of get finance in place. By the way, that was in Spain, but still, nevertheless, we talk about global property. I just thought it was the right thing to do. So I'm not sure we agree with this statement. Another one from the website said, without doubt, many people are not adequately prepared for the new era we're entering, Jones said. Worryingly for tenants, which it is worrying, and the interest rate rise could see landlords increase rent in order to cover rising cost of buy-to-let mortgages. I mean, from my perspective, my clients are increasing in rent. What are you seeing in the marketplace?
Yeah, absolutely. So, again, those landlords who are, up to date with the marketplace, regularly reviewing their property, managing it correctly, or have got good managing agents in. We've seen rent increases over the last year to 2 years post-pandemic, across the country, and certainly more so in the south, southeast, southwest, and the Midlands. And I think we need to kind of keep that in perspective. That landlords' margins have increased over that time, where the interest rates were low but rents were increasing. Margins have increased. So what we're effectively seeing now is buy-to-let interest rates rise is kind of coming in and taking up potentially some of those increased profit margins that you've had. So if we look historically, I think the profit margin is still roughly the same as it was pre-pandemic as to where we are now, but we've had rising rents and now we've got rising interest rates. So the two kind of counter each other out. I'm not too sure that I can worry. Yes, absolutely worrying for tenants. The cost of living crisis that we're going to see the UK go through winter of 2022 and into spring of 2023 is very scary. And certainly, it's really great to see that the government are hopefully stepping in to provide adequate support for those people. But as landlords, unfortunately, the market dictates where we're at in terms of rents, and it's that lack of supply that has, I think, driven rents up.
Yeah, I saw another YouTuber talk about he sold his property because he thinks the house pricing is going to go down, and he estimated that the rental payments for the next 2-3 years might be 50,000. There could actually be 60, 70,000 if he's not careful, going in the wrong area, because the rents could increase. So, but I think again we need to be mindful that just because we're talking about rents going up, living in a home with a mortgage, that's also going to be going up. So we do need to be kind of mindful of that. And funny enough, Mortgage Introducer talks about people need a roof over their head and rental prices are increasing at the same rate or even higher in some areas of the country. We can't control interest rates, but it will definitely make having a good broker essential. It's like essential for people to ensure that they get the best deal. I've always said, and we've always had you on this show, we refer so many clients of ours to you about getting a mortgage broker. The truth is a bit like Direct Line, where they don't go on to, for insurance purposes, they don't go on comparison websites. We talked about comparison websites earlier, but there are products that aren't even available for those comparison websites. Would I be fair in saying that?
Yeah, you've got products and lenders that don't necessarily appear on those product comparison websites. And then I think the other thing that is massively underestimated right at the moment, well, we haven't had a rate rise environment for, as we say, since 2008. So what a lot of the price comparison websites are struggling to do is actually update the data that they have in the system, first of all, so that what they're actually recommending as the cheapest product has disappeared, gone, or isn't the cheapest product at that time. And then the other thing that they really struggle to do is to work out about your property. So your property will have certain characteristics and idiosyncrasies about it, where it is, what its neighbours are, etc. And it's about matching you, the borrower, and the property to the right lender, which no price comparison website can do properly, to be fair.
Perfect. No, that's great. Here's another article I want to talk about with you, Simon. This is Money, and they talked about landlords face buy-to-let remortgage pain, but with the interest rates on 2- and 5-year fixes almost the same, which will work out cheaper. And in this, they talked about average 2-year fixed buy-to-let mortgages deals are up by 1.63%, which is high compared to 2 years ago, according to Money Facts. When you're seeing people talk about, and we talked off air about mortgage fixed rates, whenever mortgage interest rates, or in fact Bank of England, 2.5%, could be 4, could be 5, who knows? But it's always a good idea to fix those mortgages over the long term, isn't it?
Yes, and certainly trends have been, within the brokerage. I don't believe we've done a 2-year fixed for our clients this year. Everyone has been looking at 5-year deals. There's a real trend at the moment where if you've got a product or you're fixed in a current product that is due to expire later this year or into 2023, it actually can make an awful lot of sense to pay the early redemption charges now, fix a rate that's available now rather than what potentially will be higher when you actually come out in early 2023. And take a 5-year product. And most clients, as I say, going for 5-year products. When you look at the fact that the 2 and 5 years are roughly priced the same, and if you come out with that product in 2 years' time, don't forget you've got an arrangement fee to take into account, you've got surveyor fees to take into account, solicitors' costs to take into account. However, it is completely changing the marketplace. In terms of brokerage, typically a broker relied on you redoing your mortgage every 2 years. So effectively, their pipeline of business is going to completely change. Now, we as a brokerage haven't relied on that. Specifically, it's about helping investors to recycle cash. So buying something, potentially adding value, and then refinancing at a higher level to pull your cash out to go and do another deal. And specifically, that's how we kind of work with investors and build our model. So our model is going to be completely unaffected as we go through this change.
Interesting, very interesting. They also talked about if you anticipate that rates will continue to rise, you may prefer long-term protection in the form of fixed rates, which is exactly what you talked about. So in conclusion, I think we both believe that mortgage interest rates will increase. How effective they will be against this particular type of inflation is unknown. But if you do need a mortgage broker, make sure you reach out to Simon. There is a QR code. There's also a link in the video description box below. So apart from that, let's see what happens in next month's show, Simon, and we'll take it from there. But thank you for your time today.